kickstart the show with the global coverage then. Let's take a quick look at what the US markets did. Remember, US markets did manage to open in the positive territory yesterday, but could not hold on to those gains. Let's quickly take a look at all three indices. Then you had Dow Jones that was down 0.6%, S&P 500 almost 0.8%, NASDAQ, the underperformer amidst all of these three indices, a 1% cut coming in on NASDAQ as well. Let's understand first of all why this happened, why they were not able to hold on to all of these rallies. And what's interesting to note is now that all three averages have now declined in 4 of the past 5 trading sessions. There's not been a single positive day actually coming in for the US. You did have a tinge of positivity coming in for markets closed day before yesterday, but other than that, if you take a look at the overall basis, week to date the markets have not done very well at all in the US. Now also experts are penciling in that the recent jolt that the US markets have seen could be a preview to what the rest of the year could look like. It could also mean that this correction is here to stay for quite some time and is not just temporary in nature. And one of the issues that were to blame because of that big Monday fall, like that we said, like many mentioned, was the job reports, which showed slowing employment growth. And as a result, traders might be paying even more closer attention to today's initial jobless claims report that will come out of the US, and this is also going to have some indication about what the labor market is looking like in the US, and traders are also going to be searching for a potential rise in layoffs. Corporate earnings could also be a major factor on the back of which markets declined yesterday. You had Warner Brothers Discovery, Bumble each sliding in extended trading after reporting a softer than expected set of numbers, and companies all set to report numbers in today's trading session include Eli Lilly as well as Under Armour. So largely that is what has been happening on the US market. Not a very good day coming in, and actually you can see that being reflected in our implied open as well, because we are also expected to start 170 points low. It's a gap down opening barely at 24,200. But with that, let's focus, take a look at what the European markets have done as well. On the flip side though, European markets look very good. In fact, some resilience being seen on this front, because you have DAX that's closed with an uptick of 1.5%, FTSE 1.7% higher, Stock 600 also 1.5% higher. So very stellar moves coming in, and European stocks have actually closed with the strongest gains in the last 9 months. So very stellar moves coming in on this front. So basically, in a nutshell, that is what's been happening with the US as well as the European markets. You have the 10-year Treasury yield also that has risen to 3.9%. This is back to last Friday's levels, before we did see that big crash coming in on Monday. Largely everything that's been happening on the equity front, but Vinny, with that also take us through what's been happening in commodities.
Absolutely. So on the commodity front, what we saw, and this morning what is also happening is that Brent crude oil, WTI crude oil have seen a bit of an uptick. That's what even happened overnight, while Brent and WTI crude oil was trading a bit higher in trade. Brent crude oil right now at $78 per barrel, $78.5 per barrel mark, while in terms of the WTI crude oil trading at $75.5 per barrel mark. Now, Brent crude oil that's gained for the third consecutive trade session that we've seen. Largely, what was driving this uptick in the Brent crude oil prices was the larger than expected drop that one saw in US crude oil inventory. So inventories becoming less means yes, you have higher demand, supply is getting reduced. How does that work out? We'll keep an eye out on that. The EIA data which came in on Wednesday, that's yesterday, that showed that crude stocks declined by 3.728 million barrels, making it the 6th consecutive weekly decline that we've seen in these inventories. So yes, keep an eye out on that, how that is also moving in. That is going to be an important key factor that everyone will watch out for in terms of the EIA data that comes in every week. Again, next week what happens is a key factor, but 6th consecutive week of decline that we are seeing in terms of the crude oil inventories, keeping the crude oil prices a bit on the higher side. So something to watch out for, a third consecutive day of gain for the Brent crude oil prices. Quick look at what gold prices are doing as well. Now, gold prices this morning, quite a muted day of trade coming in. We could say at least starting on a muted front. 2,427.7 is what the gold price is trading at. This is per ounce that we're talking about. Silver price is also quite muted or flattish, we could say, down 0.03%. Copper, on the other hand, a bit of an uptick. This is yesterday's closing, so keep an eye out on that, on how it opens today. Geopolitical tensions, obviously that's something everyone is keeping an eye out for in terms of commodities, specifically gold prices, and hopes on how the Fed is going to be cutting rates. Are they going to be cutting rates? Is a key factor to watch out for. But yes, that's how the commodities is looking right as of now, Snehi. Brent crude oil, bit of an uptick. Gold, muted day is what we are seeing right now.